Hello friends, welcome back. In this lesson, we'll understand technical indicators starting with RSI. So let us see what is RSI. RSI stands for Relative Strength Index. Now, here I have plotted RSI and you can see that RSI ranges from 0 all the way to 100. And you can see that very clearly there is a purple zone marked here between 30 and 70. So how do you use the RSI? Now, RSI is one of the most important indicators used in technical analysis or charting, and this is how traders read it. So when the RSI goes above 70, we say the market is overbought, and when this is at 30, we say the market is oversold. Now when the market is oversold, what is going to happen to price next is once it touches or crosses 30 and it re-enters 30. So here it crossed 30, went down, and it re-entered 30. We see the market is going to go up now, so the price will go up. So as you see, after this region, the price went up, and when it actually re-enters into 70, you will see that the price actually goes down, right? So when the common confusion here is that, so that means if it crosses 70, I should short. So where should I short now? So I short, so that next the market price is going to fall and I'm going to earn on my short. But where do I short? Do I short once it crosses here while it's at the top? Should I wait, or while it's entering? So the best is while it's entering, because sometimes it can waver up here for a couple of hours, right? So if you place a short, it actually goes further up and you have a paper loss, and you wait until it comes down. So once it enters in the purple area again, you can go a short, but you have then lost this. So sometimes this is 90, 95. In this case, as you see, it's 80 here. It's 80, right? So from 80 to 70, you would already have generated some profit if you would have shorted at 80, right? Sometimes it is 85, 87. So if you short at 85, 87, it will already generate some profit. And then when do you close your position? When it actually comes out here. So this is where you get the maximum gain, right? Of course, if you close your position here, you will still have a profit. But to maximize our gain or our profits, we wait until it crosses the 30 and comes down, and then anytime here is when you can close your position. Now waiting for it to be here will be very greedy, but if you're in front of your screen and you're waiting and you're available for next 1 hour, then that's fine. But otherwise, once it crosses 30, we close our position. Similarly, if you have put a long here, once it touches the 70, it must touch, that is very important, and then it has crossed 70, you can actually take profit. Now the other way to look at it is, if you are aiming at $150 and from here until here you already got your $150, then I would say take the money on the table and run, right? So close the trade, take your 150 profit and wait for the next opportunity, because after you get this 150, let's say you encashed here, it can actually go sideways for the next 3 hours. Right now, if you did not take here because you're waiting for it to go to 70, then you may wait for this 3 hours. In this 3 hours, you might have got another, so it may go all the way down and then come up again, and you're waiting while all this is happening, right? On the other hand, if you would have taken your profit and if you see it's going down and you short it and you take some money here, so it is up to you. You can do more trades and earn on multiple trades, or you can just wait. The safest bet is to say that I long here and I short here, right? Now, what duration to look at RSI on? So in general, a good duration is 5 minutes. If you are day trading, you can even look at 3 minutes. All right. And of course, the RSI pattern will change. And if you are doing 2 trades a week, then you can look at a 1 hour. So a 1 hour shows you that after here, so this was on 28th, 27th, so end of 27th, I could have entered a short, and till today I have not actually touched 30. So I could have been holding my short, or I could have taken a profit here. And like you said, this is what I meant just now. It can go all the way up before it comes down again, right? And then you end up waiting for a couple of days. Correct? So when you're looking at long-term trading, which is 1 or 2 trades a week, then you look at 1 hour charts. If you're looking at day trading, then you look at 5-minute and 3-minute charts, right? Now, I would suggest do not look at 1 minute, because 1 minute is too fast and it's too unstable, right? So it gives you wrong reading most of the times for you to put a trade. 3 minutes is fine and 5 minutes is absolutely fine. All right. So how many minutes to choose? I have a separate video on it, and you will see and understand in that how to choose which minute for what action you want to take. All right. So this is about the RSI, that you look at 30 and 80, 70. And now my second part of this is, if it actually touches 20 or crosses 20, that is seriously oversold, and the price is definitely going to shoot up from there, right? And same with 80. So if I see price touching 80 like in here, I immediately put a short. I do not even wait, right? Now at 70, I will wait to see what happens next. But at 80, right, you are very sure, and that is the maximum profit that you can get. So do not be very greedy to wait beyond 80, right? Just put a short here, and at 20, you can comfortably put a long. So this is how we use RSI. So in the next video, come let's look at other indicators.